Does this sound familiar? You go in a chart, you're looking for opportunities and things don't look clear until after the fact, until the market closed. You're like, oh man, yeah, now I see why I should have went long right there. So today we're going to talk about what made, me see the market much clearer and how I was able to read the market or the charts much clearer and the things that I'm using right now. So when I started out, I used a lot of indicators, and I see why a lot of new traders use indicators, because visually it makes things much clearer. So me personally, back then I was using a lot of oscillators like, RSIs, and I would look for overbought, oversold areas, right? And I see why, because visually it made things clearer. Like even if you plot moving averages on your chart, right, it can literally make the market much clearer, because just looking at the raw price action, sometimes it's just like not clear. But today I'm going to talk about the things that help me just, make things clearer and the things you can use on a daily basis. So let's look at it right here. So one thing that made, reading the chart much clearer was just only focusing on one time frame. So right here we are on a daily chart. And this is the NASDAQ, right? So daily chart right here on the NASDAQ. And actually, let's go to a 4-hour chart, because, a lot of people will tell you to do top-down analysis, and nothing wrong with that, right? But right here, this is a good example of why I look at one chart. So right here, we have a bullish market, right? You can't deny that. And then the market is making higher highs, right? Right here. So automatically, you're probably thinking, all right, let me look for longs at this area, But guess what? The market shot down, and you're looking for maybe for some longs right here, and then most likely you probably didn't get good opportunities. So right here, let's go to the 5-minute chart, and let me show you exactly what I see. So this is the day right here, guys, when the market started to go down, right? And overall, the 4-hour looked bullish, but on the 5-minute chart, we're just shooting down right here. So on a 5-minute chart, what I would look for is I would look for a 5-minute level. So right here, I see that we have resistance. And basically I will go short right here, and I will look for, profits. And I actually did go short right here. I think I made a quick 6,000 on this one trade right here. But overall, that's how I will look at the market, right? I will look at 5-minute levels, the 5-minute trend, the 5-minute direction, and I would go from there. So I'm only looking at one chart. Let me show you guys some more examples. Now, here's a good example of, just looking at the 5-minute chart, and we have resistance right here. Look for short opportunities right here. And, that's it. Let me show you another good example. Here's another good example, guys. We have the market going up right here, and then we have demand right here. And you're looking for trade opportunities around these 5-minute levels. So looking at one chart made things much clearer for me while I'm reading the chart. I'm looking at the 5-minute levels, 5-minute supply and demand levels, 5-minute resistance levels, support levels, and going from there. Now, another thing that really made my trading much clearer when I'm reading the charts is looking to the left. So let me show you guys some good examples. All right, so here's a good example of just looking to the left. So right here, we have the market going up, right? So automatically, you probably think, oh man, the market is bullish. But if you look to the left, what do you see? We see a resistance right here. And then the market reacted to that resistance and then sold off. So a lot of times people in general will get so caught up with just looking at the time frame and not zooming out and seeing what's to the left. Let me show you guys another example. All right, here's another good example, guys. The market's going up, right? It's trending up, but look to the left. What do we have? We have the market basically showing you that it reacted to this area multiple times, right? So to me, coming to this area right here, you have to watch out. Even though the market looks bullish, it looks like it's trying to go up, you have to look at this area. So you have to look to the left to see what's going on. Here's another good example right here. Let me zoom out. What do we have? We have a sharp down move right here. So the market, when it went to this level right here, look how much it dropped. So when it comes back to this area right here, it's a possibility that the market might react to this area, and it did. Actually, I did take a short right here, and I made 5,000 on this short. Basically I waited for the market to sell off first, wait for that pullback, and I took that short right here, and basically that's how I made my profit. So looking to the left is another way to read the market and make it much clearer for yourself. A lot of people will have tunnel vision when they are trading, and they're not zooming out and seeing what's to the left. And another thing that helped me just read the raw price action is hitting that like button and subscribing to the channel. So make sure you do that right now. Now, another thing that helped me, okay, the third thing that really helped me with the chart, just looking at the raw chart, was looking at horizontal lines and trend lines. Let me show you some good examples. Okay, so here's a good example, guys, okay? So I'm looking at the market right here, and I'm looking at this right here, okay? So automatically, when I see the market breaks this trend line, I'm not looking to buy anything right here because the market sold off. And now, to me, this will be only short opportunities, okay? So anytime you see the market trending up or trending down and it breaks the trend line, okay, that's an indication that the market probably wants to reverse. So I'm looking for that continuation. So let me show you some more examples. Now, here's a horizontal example where, you might not even get a trend line. So let's say that you're looking to draw a trend line and you can't draw a trend line, right? Well, that's where you have your horizontal lines in place, okay? So you have to understand that horizontal lines and trend lines will help you read the price action much better. And especially if you're reading raw price action without any indicators. So drawing lines on the chart, your support and resistance lines, your trend line breaks, that will help you. So let me show you some more examples. Here's another example, guys, where the market is trending up, right? And all of a sudden, boom, it breaks the trend line. To me, I want to be a seller, okay? So I have a nice supply area right here, and I will look for, short opportunities to the downside. Okay, let me show you guys some more. Okay, so right here, the market is trending down, and guess what? Okay, first we have this horizontal break. Okay, so we have this horizontal break right here. This would be a area where you will look to go short once it wasn't pulled back to this area right here. So this is a horizontal. Now, what do we have? We have a trend line. Okay, so the market is trending down, but all of a sudden it breaks this trend line right here. This is where I would say, okay, maybe the market is trying to reverse. Okay, so I will look for possible, opportunities to the upside now since the market breaks this trend line and it's trying to continue to go up. Okay, so just looking at trend line breaks, here's another good example right here. Okay, the market started to pull back. Now all of a sudden it breaks this trend line. Okay, so looking at trend line breaks and looking at horizontal lines help me read the charts much better, especially if I'm looking at raw price action. The reason why I don't look at too much indicators or indicators at all is because indicators are lagging. Okay, so looking at the raw price action is the best thing to do. So drawing these lines, horizontal lines, trend line breaks, this will help you understand what the market is doing. Okay, and will give you that good visual guide, because the reason why a lot of people will plot moving average on their charts or indicators on a chart, because it gives you that good visual guide and things will look much clearer. That's why a lot of traders use indicators, and I don't blame them, okay, in the beginning. But indicators are like training wheels, okay? Eventually, you're gonna have to take the training wheels off and just trade the raw price action. So this is another thing that helped me just read the raw price action. Now, the last thing that helped me with the reading raw price action is developing filters. So what do I mean? Well, a filter is basically helping you not trade when you're not supposed to. Okay, so a good example is trading late in a trend. Let me show you guys a good example. All right, so here's the market, right? It's trending down, and to me, it's trending down right here, and then it did a sharp move right here. So let's say that I'm looking to get, active right here. To me, I'm late in the trend. We've been trending from all the way down to right here. I'm late in the trend, so that's one of my filters. I don't really like to trade or participate late in the trend. Okay, I just rather wait for a pullback. So one area I probably will wait for maybe a pullback to this area right here. We have a nice supply and we have a resistance right here. Possible areas right here too. Notice how it reacted to this. But getting late in the trend, especially the market is going down like this, to me that's a filter that I would say nope. I'm not going to trade that. I would rather wait for a pullback, let the market breathe a little bit, and then take a trade. So that's one filter. So another filter could be, let's say you're trading breakouts, okay? You don't want to just trade breakouts. You want to see momentum, okay? So here's a good example of, let's say you want to trade a breakout and you see that the market's trying to break out this level. Well, it didn't break out that much. It broke out and then it went right back down. Okay, let me give you a good example of better breakout than this. Okay, actually it's right here. Notice how it broke out of this level right here. Let me erase this so you can see better. Okay, it broke out of this level right here. Okay, but notice how it gapped that level. It broke out of it with nice volume. You see the volume right here, and it gapped the level. It gapped this support level, and it pulled back. So this would be a nice trade, okay, for possible breakout. So you can either take the initial breakout or wait for that pullback. Let me see if I see another example. Here's another good example, okay? The market was having trouble around this area and it finally broke out. Notice how it broke out with this nice volume candle, okay? A lot of volume out this breakout. So take the initial breakout or you wait for a pullback, and it came back to this area right here and you'll look for that continuation. So just taking, breakouts just because you want to take a breakout, it's not going to work, okay? You need filters in place. So this filter would be wait for that volume break, meaning wait for a lot of buyers to break it, or if it's going down, a lot of sellers to break it first, and then you participate. So that would be a filter for breakouts. And the next filter is just not buying at resistance and not selling at support. So right here, here's a good example. Okay, you see that the market looks like it's trending up, right? Look at it, right? You see the market right here trending up, but what do we see? We see resistance. So why do I really want to buy at resistance? If you look to the left, we sold right here, we sold right here, and then we sold right here. So, I mean, if it comes right here, it's a possibility the market might sell off again. So why do I want to buy right here? Yes, we do have a lot of buying, okay? But this filter is telling me do not buy at resistance because it's a strong possibility sellers might come in, okay? So this is a good filter to have, this reading raw price action, okay? Now, again, these are the 4 things that I use every single day to read the raw price action so it can actually make sense to me, okay? Because a lot of times when you just look at the candlesticks or just look at the chart by itself, it might not make sense to you, okay? This is why you have to draw your horizontal lines. You have to draw your trend line breaks. You have to understand when not to trade, when to trade. Look to the left. Don't buy at resistance. Don't sell at support. You have to understand these things when you're looking at the raw price action, because looking at the raw price action is the best thing to do, because you're not going to be lagging. Indicators will lag, price action won't lag. So that's all I have for you guys. Make sure you just review this, take notes, and let's get it. So talk to you guys later and have a great day.